So, VC Janelle, are you ready to invest in my company, Eric Co?
Oh, Eric, I'm so sorry, but your company is just not venture backable. Hey, but I will be cheering for you from the sidelines.
Founders, has this ever happened to you? This episode talks about 3 reasons why VCs may not think that your company is venture backable.
After watching this episode, founders, we hope that you walk away with an idea of what venture backable means and if your business is right for VC.
So, the first reason why VCs might say your company is not venture backable is they just don't like your business. And instead of giving you a flat no, you got to understand that VCs are a passive aggressive bunch. It's sort of like high school. You don't really break up with your girlfriend or boyfriend by just saying, thank you so much, but we're going to break up. No, you just stop answering their texts and phone calls, right? VCs are sort of like that, but in grown up form, and are generally terrible when it comes to confrontation. But in addition to this, they don't necessarily want to fully burn bridges in case they are wrong. Maybe you do show some progress, and then the VC will try to come crawling back to get some allocation into your company later on.
Right. So this is why VCs, like me at the beginning of this episode, try to leave things on a positive note. They don't want to burn the bridge, and they are sincere about this. So while they may be passive aggressive about saying no, they do want to leave the opportunity open in case they were wrong about your business.
And I want to be clear about 2 things. One is not all VCs operate this way. At Hustle Fund, we will give you a direct response as to why we are saying yes or no, and we don't want to play that game either. And there's plenty of other VCs now that do this too. But I will mention an important second point to this, Janelle, which is I'm wrong all the time. Let me give you an example of this. There is a great founder out there who started a company called CoinTracker. It's sort of like TurboTax for crypto. And I remember saying no at his very, very early pre-seed rounds. I think I had some trouble with the valuation, which in hindsight was still extremely low. And I didn't have that much conviction that crypto was going to be this big thing back in 2017. Turns out it did. And then now this company is worth nearly $2 billion. This is actually something that we call an anti-portfolio, when you had a chance to invest in the business but chose not to and then went on to do really, really great. But this is the reality of venture, which is we're not all-knowing at all. We should have an anti-portfolio that's as big or maybe even bigger than the ones that truly work out. So don't take it too personally either if someone says no, because it's possible that you are the only person who understands you're right, and in a sea of people who just can't see it yet.
Okay, so the second reason a VC may say that your business is not venture backable is they think your business may be too small to support a big venture backable outcome. For a pre-seed stage fund like Hustle Fund, we are trying to invest in companies that can produce a 100x outcome on our investments. That's a really big threshold. Okay, so say you're a company with a great product that has incredible product market fit. For instance, you produce trombone oil. Now, hear me out on this. It is enormously important for trombone players to have trombone oil. For every trombonist out there, they need trombone oil. However, how many trombonists are there in the world? This business is unlikely to become a billion-dollar company. It's just too small.
Okay, I really like this example, Janelle. So you found a company that has great product market fit. Maybe the founders are amazing and they're going to dominate, possibly even be the monopoly of this industry. But can I 100x my money on this idea alone? It seems unlikely that I can do that as a VC firm. However, this is why being a little bit coy about rejection is something that a lot of VCs like to do. Again, a Hustle Fund will give you a flat yes or no and the reasons why, but I understand the motivation to be a little bit vague, because let's say that we say, well, Janelle, maybe we should just check in a couple months to see how things are moving. And it turns out Janelle discovers that she can use her trombone oil formula to apply this to all industrial lubrication in manufacturing. At that point, I think I would want to come crawling back, right? Because that seems like a multi-billion-dollar industry. There's so many, actually, you're going to be serving many multi-billion-dollar industries with an idea like this or product like this. So that temptation to be a little bit passive-aggressive and a little bit unclear and vague, it's annoying for founders, but understand that that is also a background motivation for certain VCs. Aww. Not us.
So the third reason we're going to talk about today that your business might not be venture backable is that the VCs are skeptical about how fast your company can grow and achieve your outcome.
Okay, so it's worth diving into this perhaps with an example. So at Hustle Fund, we do a lot of SaaS investing. SaaS stands for software as a service. That's a type of business model that we really, really like. And in general, there is a rule of thumb that SaaS investors would like to see, which is by year 5, the 5th year after we have invested in your company, that you are now achieving $100 million in revenue. That's a really big threshold. Revenue is generally the most solid metric for growth when you're a SaaS investor like ourselves. And then sometimes it's a little bit different if you're a consumer investor. If you're investing in the next TikTok or Snap, maybe it's a little bit less about revenue, more about very fast user acquisition and retention. You want to get to like 10 million or 50 million or 100 million users within a short period of time.
Wow, Eric, that seems like incredibly fast growth. And it doesn't seem like every SaaS business even will be able to achieve that rate of growth depending on the market.
Yeah, that's right. And this is worth a reminder to our Uncapped Notes viewers to check out episode 23, the one that we had recorded before this 24th episode, because we talk a little bit about this, which is this idea of why VCs are motivated by speed. But it's really hard to say this kind of feedback to founders that we just don't think that you're in a market or you're capable of achieving lots of great speed without sounding kind of condescending. We have to be really, really clear about our reasons at Hustle Fund. This is a rule on our investment team for why we pass. And we will say that, but try to say it in the most respectful way possible. But this isn't the kind of clarity that's universally accepted by the VC industry. And, you know, I hear these conversations a lot of you saying like, oh, this is a great kind of product and market, but it's the wrong founder, right? They just don't seem to be capable of moving very, very quickly. That threshold of growth is just an expectation that our investors need to see in order to justify their investment into the VC fund. So again, VCs are not all knowing and things can change. Founders can evolve sometimes really rapidly. A clue for this might be something like, oh, I love your product and your market, but it's just a little bit too early for us. Why don't we check in again in like 6 months? That's a code for VCs to say that they're skeptical about you or possibly some aspect of your industry, but they want to buy a little bit of time to study it a bit more.
So in summary, 3 reasons why a VC might say to you that your business is not venture backable. First, they may be vague with you because they're unsure of some aspect of your business, whether it's the business itself, you, and they just want to buy some time. 2, they are concerned about the size of the market. They think your business is too niche, the market is too small. And finally, they may say you're not VC backable because it's going to take a long time to grow into a big business.
So, to our Uncapped Notes viewers, can you think of any other reasons why VCs may call your company not venture backable? Or maybe do you have any passive-aggressive stories that you've received from VCs who have vaguely said no to you? Let us know in the comments, and don't forget to like and subscribe to Uncapped Notes.